Hello and good afternoon. Holly Shield here reporting to you live from Kalkine TV in Sydney, and you're watching the mid-market pulse. Let's take a look at the overall share market performance by the mid-session trade. And Aussie shares continue to trade lower by the afternoon, reversing early gains as investors turned cautious ahead of the Federal Bank's meeting outcome. The central bank is widely expected to keep interest rates unchanged, while it may shift policy towards the next rate hike given the substantial rise in bond yields last week. Financial and mining stocks were among the top laggards in the market, while mining stocks dropped due to a continued fall in commodity prices, and banking stocks tumbled amid a looming fear of sooner than expected rises in the cash rate. By the afternoon trade, the ASX 200 index was down 33.70 points or 0.46%. The benchmark index open ended higher today, tracking overnight gains on Wall Street, but soon slipped into negative territory ahead of a highly anticipated Reserve Bank meeting outcome. Investors also kept an eye on key central bank meetings in the US and UK later this week. And to Wall Street, the major US stocks closed mostly higher on Monday amid a late buying spree as investors cheered upbeat quarterly earnings and economic outlooks. The S&P 500 ended 0.18% higher, while the Nasdaq Composite gained 0.63% after resetting its record highs during the session. Meanwhile, the Dow Jones closed 0.26% higher as investors kept a close watch on the Federal Reserve's two-day policy monthly meet, which will be starting today. The US Central Bank is likely to announce a timeline for withdrawing its $120 billion monthly asset buying programs, which are expected by mid-November. Then back home on the sectoral front, 7 of the 11 indices were trading lower, led by financials, which dropped 1.3%, followed by a 0.9% fall in telecom and materials space, among others. Consumer discretionary and tech sectors also reeled under the selling pressure, but bucking the trend, the A-REIT sector was the best performing one with a 1.3% gain. This was followed by utilities, of course, which rose 0.6%. Consumer staples and healthcare sectors also witnessed buying activities, but the top loser on the ASX pack was Aussie insurance company Australia Group, which fell 6.6% by the mid-session trade. Some of the other top laggards include coal miner Whitehaven Coal, construction business Brickworks, online retailer Redbubble, and miner IGO. Meanwhile, property business Goodman Group topped the gainers list by rising a whopping 6.3%. Very impressive there. And other wins came from diversified financial group Janus Henderson, real estate firm Charter Hall, agro-based company Grain Corp, and natural gas infrastructure business APA Group. With that said, let's now zoom our lens into the stocks that created a buzz today. Shares of IAG dropped nearly 6.5% after the insurer revised guidance for financial year 22. The company has lowered its insurance margin guidance from the range of 13.5 to 15.5 to between 10 and 12%, citing a rise in net natural peril claim costs due to adverse weather conditions. IAG has also raised its expectations for the financial year 22 net natural perils claim costs to $1 million, as against the previous assumption of $765 million. The insurer said the net natural perils claim costs for the first 4 months have exceeded IAG's previous assumptions. The revised financial year 22 expectations also include approximately $510 million for peril events for the remainder of the financial year. And shares of Westpac extended the fall for the second day following their annual earnings report. The share price dropped over 3% after falling over 6% yesterday, as global brokerage firm Morgan Stanley lowered Westpac stocks to an equal weight rating, citing a decline in its net interest margin. The brokers also cut its valuation of the shares, And the major bank reported 105% growth in cash profit for financial year 21, driven by a turnaround in impairment charges and growth in mortgages. The profit, however, was lower than the revenue estimate of $5.5 billion. And net interest margin, or NIM, which is a key measure of profitability, dipped by 4 basis points. Westpac has also announced to conduct an off-market buyback of up to $3.5 billion worth of equity shares. And as this was happening, the share price of Seven West Media and Prime Media Group also continued their gaining streak for the second day. The stock of the TV and publishing business was up nearly 2% after inking a deal to acquire assets and the business of Prime Media. Bolstered by the deal, shares of Prime gained 2.5% today after surging over 80% in the previous session. And shares of Telix Pharmaceuticals climbed over 5% after the biopharma company's cancer imaging product received approval from the Australian healthcare regulator. The TGA, or to put it another way, the Australian Therapeutic Goods Administration, has given a nod to Illuccix, Telix's lead prostate cancer imaging product. Illuccix is a positron emission tomography, or PET, agent for the diagnostic imaging of men with prostate cancer. It's the first commercially approved prostate-specific membrane antigen, or PSMA. The PET imaging agent is available in Australia. Good news for them. And meanwhile, shares of Netwealth Group dipped nearly 2% after the investment manager proposed a $785 million merger with Praemium. The company informed its shareholders this morning that it has submitted a non-binding and conditional proposal to acquire 100% stake in Praemium in exchange for a fully paid ordinary share in Netwealth plus contingent cash consideration. Praemium shareholders will receive one new Netwealth share for every 11.96 Praemium share. Aside from this, shares of Unibail Rodamco Westfield traded 1% lower after partnering with AXA IM Alts to develop the Triangle Tower project in Paris. Designed by Jacques Herzog and Pierre Dumoulin, winners of the prestigious Pritzker Prize, the Triangle Tower will offer area residents new community benefits, including childcare and health facilities, as well as a cultural centre. The initial works are due to begin by the end of the year, with an expected opening due in 2026. Construction is expected to create more than 5,000 direct and indirect jobs within the community. So some great news there for the City of Love. Well, that's all for now on the Mid-Market Pulse, but stay tuned to Kalkine TV because we have many more shows lined up for you today. Holly Shields signing off.